Hey guys, how you doing today? We're here on the Property Panel Podcast. Myself, Jalen Hardcastle, here with co-host Josh Story. And today on the Property Panel Podcast, we got some special guests with us, Chad Gooden and Garrett Greenwell here today. Well, you want to go over today's topics?
So today's topic is going to be learning lending, buyer loan breakdown. But before we get into that, I want to go ahead and thank our title sponsors. Big shout out to Collier Title. They're a great company to use for title work, deed prep, title insurance, and much more. They're located in Brandenburg, E-Town, and Louisville. Also want to give a big shout out to Supreme Lending, Chad and Garrett here. They can help you with most loan types, including FHA, KHC, VA, and much more. And they can also help with refis. And then I want to give a shout out to El Kamal, this week's sponsor.
Some beautiful tacos.
Delicious tacos.
Very
good. Very good.
Authentic.
They have authentic Mexican food, and I think it's the best around, honestly.
Oh, yeah.
So give them a check out and see how they are. So.
Yep, and so obviously you've seen our sponsors. We want to obviously shout out Garrett and Chad because they're a title sponsor. They're actually who bring you the podcast as a whole. They were helping with the startup costs and everything, and we just want to give them a shout out, obviously. And for our weekly sponsors, we have options as far as weekly, monthly, and yearly. So you can do 100 weekly sponsorship, and then obviously we want to give a discount if you want to extend that sponsorship for a longer term. So we have 100 weekly, 300 monthly, and 3,000 yearly. And if you are at all interested in sponsoring any of these videos, give us a comment below or send us an email.
Yeah, or give us a call with our numbers up here. But I guess we're going to go ahead and get into Chad and Garrett and where they got their start in lending. Just kind of the basics on how you got to Supreme Lending.
Want me to start?
Yeah.
So I have been a lender for, it'll be 12 years coming up on March. So been in for a pretty good little time. I started off my journey with Century Mortgage Company, which they were a locally owned one owner place up in Louisville. And basically they were around for 20 some odd years. The owner that actually started it passed away. His widow took the company over, and then I was with them for about 8 years or so before they wound up selling out. So when they sold out, I had been with my manager for that whole time, Gary Settle. And so I'd been with him the whole time, and I knew that I wanted to stick with him, knew that I still wanted to do lending. So there was a company that bought them out, and then from there we just didn't jive with their model. So Gary went on the hunt and found Supreme Lending, and so we moved over to them in December of 2019. Been doing business ever since and haven't looked back. So
Same as us with City Hill.
absolutely. Yeah, I was going to say, I think I actually left one of our orientation meetings to come to your all's starting party here.
Right.
So that was awesome when y'all first had this building. And Supreme, so it was actually kind of a breath of fresh air. There was a lot more, definitely a lot more programs, but very, open for underwriting. They would work with you. They would talk to you. It wasn't as stringent and kind of strapped down as it was at Century. So really been loving that. Loving the fact that, we get to kind of break it up into regions. So I'm the production manager over Elizabethtown. We serve in, Brandenburg and Bardstown and Louisville. We'll go anywhere, have truck, we'll travel kind of thing. But this is kind of the region that we go around. Of course, I've known your all's family and all the real estate stuff around here, and really been coming down through the Brandenburg area for all 12 of my years.
Right.
So love the people down here, love the properties, really doing good things with Spring. So.
Yeah, y'all are doing good things over there. What about you, G?
So I'm very new to the business. Got my license back in December. Started with talking with Chad back in October.
I think.
But actually met Chad probably 4 or 5 years
Several
ago.
years ago, yeah.
Actually,
It's been a while.
initially started the lending process with Chad for my first home, and then wanted to make the transition and wanted to kind of stay in a sales position that I was in. And Jalen actually reached out to me and told me to reach out to Chad, and it's history since. Got my license the 5th of December. Closed our first loan within the first month. Got one going.
Month, one deal. That's pretty
1 month.
impressive.
Almost two. Almost two.
Yeah,
We're getting
working
there.
on it. Working on it.
But definitely learning from the best I can tell, and so Yeah, very new, but we got plenty of years of experience between Chad, Gary, and Daryl with the Settle team to get me on the right track.
And that was a big thing. Why I kind of thought that y'all jived well. Y'all have similar personalities, and y'all both have a go get it mindset. Chad,
Absolutely.
like I said, he was our preferred lender since we closed my first deal with Chad back in I guess 2018, 19, something like that.
Yeah, it's been a while.
And so I've used him primarily ever since. And then G, like you said, he was a salesman before and wanted to kind of play a different role, and that was a good path for him. And I'm glad he took the lead.
Yeah,
You've done good since.
I'm excited. I've been enjoying it. For sure.
Definitely a little different than the car lot.
Different than the car lot, but
Definitely
it's sports. Same thing. Being able to help people.
Right.
Same
Still
way
a hustle.
with you. Yeah, being able to hustle, be able to help people, and it's the name of the game. So
I can say I've been impressed, and he passed his test first rip, which a lot of people struggle with that. It's a lot. It's there's 20 hours of education before you actually get to go. So he did his 20 hours super quick. He did his practice test, started getting it, and then passed that sucker first go around. So it was great.
I don't do well with tests either. I hate them. Hate them.
But yeah, great job, man.
Do you guys have any big goals this year? Anything you're aiming for?
Or even for the future past 2020?
Man, so my goal, I do, personal goals and, of course, team goals. And so one of my biggest goals is to build out, obviously, if you've been in the housing industry over the last couple of years, the rates have just destroyed everybody. There has been a ton of fallout. That's just not here. That's nationally. So, when that happens, you'll see loan officers switch companies every other month, it seems like, just jumping. So I like to stay put. I like to have that stability of knowing, I know my underwriter, I know my boss, I know who's doing what and where. And so we really like that. And so my goal for this year is to grow out the team again, get it a little larger. And then, of course, personal production is always on key. So, and then,
all good goals.
Garrett, what's yours?
So we, like you said, he's big on personal goals. So starting the year out, we kind of got an email chain together of just what are some goals. So I'm shooting for 30 loans.
There you go.
This is going to be my goal for first year in the business.
Very obtainable. Very obtainable.
We're on track. We're doing pretty good so far. Staying busy. But my big, regardless of what that is, it's to learn the business, to be able to still be the guy that's going to be able to help you when you need it.
Absolutely.
But just learn, grow, and just kind of keep that core focus at being the guy that helps.
I like it.
Yes, sir.
I guess you want to go ahead and dive into what we're talking about today. Okay. So we're going to go over loan types. I guess we're going to go ahead and start off with an FHA loan and what that is exactly, who qualifies for it, who might want one, who's your audience for kind of an FHA loan?
So FHA, for those who don't know, that's the Federal Housing Administration. It's a government-sponsored program for people who statistically used to have a harder time purchasing a home, but mostly targeted towards first-time home buyers, lower down payment costs, etc., to make it more accessible to be able to get into a home. And that's probably one of our most popular programs that we do with Supreme. So first-time buyers, you're in good hands with Supreme Lending because that's what we like to handle.
What incentives do they have to offer for the FHA loan? Is there anything that might catch a buyer's eye to use that loan over another?
So the biggest thing with FHA is the lower down payment requirements. So most standard loans, or I say standard conventional loans, require anywhere from 3 up to 20%. 3% being a very small margin.
First-time home buyer.
First-time home buyer. FHA is government insured for the instance of foreclosure, if I'm not correct, or if I'm correct.
So FHA has the PMI on it. That's what protects lenders in case anything goes awry with it. But FHA also, you can go all the way down to a 580 credit score, 3.5% down. A lot easier per se in the approval. So whenever we get a loan and it's actually going into the system, we're shooting for a pre-approval. We are doing, it's data entry. It's putting where they work, what they make, all this stuff into the system. And so when you get it all in there, you actually have to run like a preliminary underwrite. And so those tend to be a little looser with FHA, right?
And before we do go over to these other loan types, this is just a question for you guys. I know that us as realtors, we get these approvals whenever we're drafting up offers and trying to get something under contract. What's the difference between a pre-qualification and a pre-approval, if there is one?
So pre-qual and pre-approval are about the same. We kind of actually, when I first started, that was one of the biggest questions I had.
Mm-hmm.
So pre-qual / pre-approval is an approval based on what was submitted on an app pre-underwriting conditions, which conditions, in a nutshell, are true verifications. Verifications of income, verifications of employment, verifications of anything to really get down to the nuts and bolts, the actual decimal points. So pre-approval is more based on what was submitted, and then after that you get your true approval when underwriting and your processors go in and build the deal completely.
Okay.
What are some cons or some obstacles, I guess, you'd run into with an FHA loan over, let's say, like a conventional?
FHA is pretty. It's
pretty
hard
loose.
to find cons.
Yeah, it's pretty loose.
Um,
Well, your one con, so there's a funding fee associated with it. There's 1.75% that you have to tack on. So that's definitely a con in my eyes.
Lifelong MIP,
Yeah, there's lifelong MIP. So
mortgage insurance.
whereas a conventional loan, you have the ability to pay down and then it actually falls off on its own. On FHA, you have to refi to get rid of it. So that's one. And then of course just the monthly MIP. Like not all loans require it. You can do one bulk payment for that with a conventional loan. You can do that monthly with a conventional loan. So it just kind of, there's give or take there. And conventionals can get down low on credit scores too. But whenever you're getting down lower on a conventional, you're getting beat up on rate, right? So there's give and take with all that.
Right.
And underwriting.
Yeah,
with
underwriting.
it being a government sponsored
So
or
the
government
rate
insured.
isn't just, for sure thing. Like it depends on the person, So a lot of people will ask you, can you tell me what today's rate is? But, you can't necessarily give them a for sure answer without.
That's a ballparker.
Yeah,
That's a ballparker.
question.
So
a lot of people don't understand, I don't think.
yeah, and you will see, there's a lot of media attention around rates. There's a lot of, if you Google it, you'll get 1,000 different things. And so, for example, y'all mentioned Kentucky Housing. Kentucky Housing is one program that we offer that they do set the rates. It doesn't matter if you're in, Paducah or Lexington. If you have a 620 or a 700, you're going to get the same rate as you would on those.
Okay.
Whenever you're using just straight government loans, there's, for lack of a better term, there's tiers.
Right.
And so if you fall into this credit category, you're going to get X. The higher you go, the better, of course. But so it's really just depends on what you're looking like. Very situational, program to program, that sort of thing.
What about KHC? Is there more to KHC? Like, what can that help with some buyers?
So, thing with KHC, and a lot of states I know offer some sort of similar program, but KHC, it's Kentucky Housing Corp, so specific, of course, to our state, is a program mainly for first-time home buyers for down payment assistance. It is a typically fixed-rate second mortgage that you get on your home at typically a lower rate than, of course, what your primary mortgage is for, up to $10,000 worth of down payment assistance that you can use.
Right.
Do they have to pay that debt back, or is that just forgivable, or how does that work?
So it is paid back, but it's over 10 years.
Oh, okay.
And again, it's at a lower
Mhm.
rate than what your
Then your
first lien is. So yeah.
Okay.
But yeah, so
And it's always a lower rate than your first?
yeah,
Okay.
typically, right?
So in my 12 years, it's never been, it's never been higher. And right now it's 3.75%. You can get up to 10,000. In the last couple years, they've actually changed that around a lot.
Mm-hmm.
It went from being 6,000 to 7,500 to 10,000, and then it went from them offering several different programs. They have some special money out right now at 6%. So it's one of those things. If you qualify for it, if you're a first-time home buyer, if you're under a certain amount for income and that kind of thing, that you would qualify. So it's really, again, there's so many, I like you're saying nuts and bolts. There's so many nuts and bolts to digging into it that it's really, if one person walked up and said, well, what can you do for me?
Mm-hmm.
Man,
Right.
loaded.
Yeah.
I can tell you that we have just a plethora of options. We got options on options on options.
Yeah.
But until we actually get you in, start talking to you, get your information, that's where, really when we can start narrowing.
And I ended up getting my house on FHA and had the KHC down payment assistance. It was about 5 years ago.
Sure.
Yeah, so I was 20. I needed help with the down payment, and it was the perfect program, or
Yeah.
I wouldn't be in a house right now. So.
Sure.
And then you've used that loan to buy other houses
Yeah.
even since then. So
And so KHC too, one good thing about that FHA program in general. So without getting way into it, loan to value, right? Loan to value is just basically how much you owe on your house versus what it's worth. And so with an FHA, when you have DAP, so let's say that you got a great deal on an FHA KHC home. Let's say you bought one, easy math, $100,000. Let's say it's worth $150,000. You can actually refi that back in together, and so now you take it off of two notes into one, and you can go all the way up to 97.75%. So you can go over the normal FHA limit. So
that is
yeah,
good information.
it's good to know to wrap them all back into one.
Great for the buyer who you have some cash, but you like to keep it in the bank.
Yeah, yeah, yeah.
You know, so let the state help you save some of that way, because everyone knows first house typically you're going to be fixing something, you're going to be doing
Yeah.
this,
Yeah.
let them save you a little bit of upfront cash, and it helps with settlement costs too. I mean,
Absolutely.
it helps the buyer on the first time get to a table possibly with little to no money out of.
And I think you guys have even done in some cases where the buyer has gotten money back somehow. I don't know how y'all work that out. But.
Generally speaking, not. But with those, you're looking at, let's just use $100,000 again. If you had $100,000, you're doing a conventional going through KHC. It's 3% down because you're a first-time home buyer. So now you have $10,000 to put that $3,000 down. Then you've got $7,000 to go out and put against your closing costs, your prepaids, appraisal fees, title. So now that $7,000, typically, it's very customary that we ask for closing costs in these parts, right?
Oh, yeah.
So now that $7,000 that's going against the closing costs in general, now you might win that deal because you might need to ask the seller for $500 or nothing at all.
Need concessions,
Whereas
yeah.
typically somebody
Okay.
else might come in and ask for
That
6
makes
or
sense.
7.
Because even I was questionable. I was like,
Yeah.
I mean, I'm happy for y'all.
Yeah.
I don't know how
Yeah.
to feel on both ends.
Yeah.
Right.
but
Yep. So
They work their magic, in many ways.
right.
I guess let's move into rural housing. What is it? Who is that for?
So with rural housing, a lot of people hear it as USDA loans.
Mm-hmm.
And you think USDA, like with the food, you're right.
Yep.
Same,
You're right.
same
Yep.
people.
Same people.
But with that, again, it's just rural housing, rural areas, counties, areas just solidified as rural. So like in our area, Meade County, Breckenridge County, mostly qualify, but you get into like Jefferson County, bigger city, you're not going to qualify for
Right.
something like that. But with USDA, what makes it so special is it can be possible up to 100% financing, 0% down payment.
That's nice.
But government underwriting or government guidelines, underwriting specifications,
Very specific.
very specific, has their own automated underwriting that you have to go through no matter how good any company's underwriters are. USDA will go through one place and one place only.
Yep.
But it's rural areas, 0%
Okay.
down payments.
Your con on USDA, or I say it's a con, is, and nobody can get around this either, is when your company, our company, would underwrite it and approve a file, you got to send it to them.
Even
Can't
if
get
it's
around
already
it,
approved.
yes.
We're good on our
So you can't get around it. You have to send it to them. They have to review it again and then issue the conditional
A little
commitment.
double check. Huh?
Yep. And so once they do that, I've seen turn times be 2 days or 2 weeks. Or, it just depends on
Up
it's
to them.
it's government, right?
Yeah.
And then so they also have a shutdown period. So they always shut down in October. And so, man, you got to kind of watch that when you're writing those, when you're getting around those time frames. You're trying to close them real quick, or definitely before. Yeah, absolutely. Those products can also be used with KHC too. So if you have USDA, you have 0 down. You have up to $10,000 on the back side of that, to where you might not have to ask for closing costs. So good tool there.
Nice.
And I know they have income caps as well, and they take into account household income versus
Yes, sir.
a lot of loans are individually based,
Person, yeah.
or it's entire household incomes, and also plays a part into dependence as
Yes,
well.
absolutely.
So
Okay.
something.
Childcare.
So like I said, USDA, you think of a farm, mom, pa's got 3 kids,
Right.
they take the whole show
Okay.
into account
Everyone's
instead of
putting
just
some
one
effort.
person. Yeah.
Okay. And then I guess jump into what I guess most people might know, the conventional loans.
Yep. So conventional loan is pretty much what I learned when I was doing my classes and everything is 30-year fixed rate.
30-year fixed.
That is a conventional. That is from day one until probably the end of mortgages will be 30-year fixed rate. That ranges, as we talked about earlier, anywhere from 3% down as a first-time buyer, and then ranges from 5% all the way up to about 20% based on different
Criteria.
Criteria,
Yeah.
yeah. Whether it's an investment property,
Second home.
So as far as the difference in inspection and stuff, obviously, if I'm not wrong, a conventional loan would offer less inspection and stuff like that versus VA.
It's
Not
definitely
as
looser.
strenuous.
Yeah,
Yeah.
it's not
Not
as stringent
strenuous.
for sure. And a lot of stuff, you can say like septic inspections and even sometimes foundation inspections, those kind of things. If the appraiser sees something, so if there's an eyeball that they catch it,
Right.
or there's an inkling that they get whatever and they order it, then we have to get it. But technically, we don't have to, disclose it and go through it right off the bat.
I got you.
Did we go into eligibility of these different loans?
I don't think we asked them.
So if you guys don't mind, I mean, if we could go over, what it takes to get into an FHA or KHC or rural housing, or even, I guess we haven't gone into VA loans either, but what are some of the requirements to get qualified for these?
So I know with the FHA, most of your government loans are going to be a credit score of roughly 580
580.
at the minimum. Conventional, I believe 620
You can get down pretty low with conventionals, yeah, but 620 is what we like to see.
is supreme
Yeah.
kind of
Yeah.
I
realm.
want to make sure they're good for it.
Yeah, because conventional just two different types of loans when you're government insured versus
Yeah.
Right.
it's secured
Oh,
pretty
so
much
that's
on
on
your
y'all
person.
or the company, I guess, huh? In a sense.
At the end of the day, I guess technically whoever the lender or servicer is going to be, whoever
Right.
owns the loan, yes, at that
Yeah.
time would be on them.
Yep.
Whereas the VA, USDA, and FHA are somewhat either insured or guaranteed,
Guaranteed,
by
yeah.
Mhm.
by the federal
Okay.
government,
Yep.
up to a certain amount at least.
And then, so what we're looking for with qualification, pretty much, so this could be a broad spectrum, right? We're looking for 2 years of employment history. We get the question all the time, well, what if I've moved jobs? Well, does it make sense? Did you move from a job that was making $50 an hour down to 12? Because why would you do that?
Right.
But if you move from a 12 to a 50, then of course that makes sense. Can we work with people that were W-2'd and then decided to go 1099? We can. It's case-by-case basis. Of course, we
Right.
got to talk through it with you. So, that kind of thing. So 2 years job history. And then we're looking for, roughly most programs require 3 trade lines. So what's a trade line? You're talking credit card minimums, note loans, car notes, student loans. We like to see 2-3 things on there. We're looking for histories of 12 months and over. That's what we like to see. That's where it really establishes credit scores. And so once you get all those things together, that goes back to that system that we were talking about that we run through. So you're looking for the credit score, you're looking for the trade lines, you're looking for income, assets, all that stuff. So that all leads into your qualification. Once we get all that stuff in and put in, that's when we can actually run it, and there's your pre-approval. So that's
Okay.
what that is.
That's good
I
information.
think we kind of went over, what about VA loans? What's that good for? Who's that good for? And how do those work?
So of course, VA. Anyone here's VA, it's Veteran Affairs. But VA was set into play to make sure that our armed forces, our veterans, are taken care of and not taken advantage of in the mortgage
As it
realm
should
of
be.
things, as it should be exactly. So probably, in my opinion, experiencing it now, I've done one now. The strictest underwriting, in my opinion, I think, or pretty close
Pretty
to
close.
it. Just the guidelines that you have to have. VA offers 0% down payment to be able to help them keep cash in their pockets as well. They have their own appraisal board set completely differently than any FHA conventionals. They have their own
They
own
send out
people,
their own.
own people to do it. But just to make sure that they're covered in the instance that anything were to happen or that anyone was out to, I guess, malicious intent in
Out to get them.
lending
Yeah.
real estate.
Yeah.
Yeah, just to make sure
Right.
that they're covered and protected.
And I know y'all talk a lot about the underwriting, which you kind of briefly touched about. What's the difference in the different underwriting options? Because y'all have a different couple options at your office, don't you?
So we actually have an in-house underwriting team that they have to go through, similar to us with education, that sort of thing. They have to go through and get program by program. So you can have one underwriter that can underwrite conventional but can't underwrite VA and vice versa, right?
Okay.
So we have all that together, and again, it's in-house. we have a deal desk that we can go to ask questions at. If it's one of those things that we need to make sure it makes sense, we have that option too. So that's something that really helps for us. And then with veterans in particular, they have what's called an entitlement. They have a certain amount of money that they can use without putting anything down. And so we always pull what's called their certificate of eligibility, make sure they have entitlement. As long as they do, they can purchase. Their first home can be 0 to whatever, right? It doesn't matter. Their second home has to be over $144,000. Don't ask me where that number came from, but it's got to be over 144. That's called Tier 2 entitlement. And so they can actually purchase, a property in Kansas, get stationed in Kentucky, and they're coming this way without having to sell that one. They can also purchase here. So that's a common question that we see a lot is, can you use your VA again?
I was curious about that too, because we actually had an instance where a house we was flipping, we had it for sale for like $135, and we got it under contract. But it was VA.
Yeah.
Well, they said, "Hey, this has to be over 144,000." And they was upset with me, and I was like, "I don't."
I don't
know.
know.
The VA wouldn't allow us to pay him back either. Like the money had to come to us, and we felt bad because we were making an extra little bit, but it was out of our hands. Which she was, like you said, they have the precautions in place, so they're hardly out of pocket anyway. So it wasn't too much on, I guess a difference for him anyways, but
yeah, and they have their own thing on appraisals, versus single appraisal versus second appraisal. I mean, there's some stuff that goes into it, but it's to make sure because someone who is military, most people have to stay in a home typically 2 years, or you all might know that for tax purposes.
Yeah, I think 2 years you gotta be.
And then military, sometimes they have to leave, and so typically under a certain time frame, a second appraisal is like a turn off thing in mortgage lending, but they are kind of subject against that. But just make sure that they're taken care of, and as they should, again, like you said.
And one thing we failed to mention that we were working on is so we do manufactured housing, and all of those programs we just talked about can do a manufactured home.
Which, next week, sorry to interrupt, we're actually going over modular homes next week, so we'll get the breakdown on everything that those homes have to offer, while today they can give you a little information about the loans.
It's really no different. So with us, KHC has two different types or Kentucky Housing Corporation has two different types of people that can do business with them, right? There's delegated people, meaning that our underwriters are delegated and they accept our underwrite, and then there's third-party originators, TPOs. So with us, having a house, knowing all the conditions of it, so knowing that it's got to be on, foundation, it's got to have its HUD labels, it's got to have X, Y, Z. Once we get all those together, then it's no different than sending up a regular stick-built home.
Right.
And so we do so many of them in Meade County. We are Meade County's #1 KC lender.
Yeah. I was about to say we sell a lot of them obviously too at Cedar Hills. So there's been just a crazy amount of those coming
Absolutely.
in.
Huge.
It's honestly people are misinterpreted about how structurally sound they are and all the different inspections they're actually put through to be as nice as a stick built home.
You could argue they're looked at a little harder
than
probably
stick-built
home. Based on
because
we've been having to do research on it just for something that we're coming up with.
Yeah.
And I mean they look at everything.
They do.
So.
Absolutely.
And is there anything else as far as loans go that y'all want to kind of touch base on before we take a brief intermission?
I do have a question on where do people go to get pre-approved? How do they get pre-approved? And how easy is that process?
Yes. Number one, super easy. Easiest application you're ever gonna do. Just so if you actually refer to the starting screen of the podcast, maybe even the intermission and the ending screen, you'll actually find a banner on there for Supreme Lending. Got both of our beautiful mugs on it. Cell phones, actually our LO websites are on there, emails. But anyway, find us on social media. You call us, you text us, we'll take it over the phone. You can do it on your phone, on your laptop. Takes probably 20 minutes.
That's a few
if
minutes,
that.
How quick can y'all turn them around typically?
24
Y'all doing pretty quick.
I
24
commit
hours.
So I'm a 24-hour turn guy,
Yeah,
and
that's what I
so
was
the reason that I do that is because there are so many. If somebody puts commission on there, I can't just take the word for it. We have to go and double check it. If somebody's a truck driver, if somebody has 1099 income, there's a lot more to it. If it's just a regular W-2 40-hour week, here's what I make, blah. man, we can turn those in 20 minutes if we're not
Right,
busy.
right.
Which, I mean,
Right.
24 hours is still impressive. I feel
Yeah.
like a lot of lenders slack, and that might be why y'all are, one of the best in the area. But
It's one of those things that, all the websites are on 24/7, right?
Mhm.
So we compete against Rocket Mortgage whether we want to or
Right.
not 24/7.
yeah.
And so it's one of those things. It's commitment to service. It's a little more work, but it's something that you got to do to stay ahead of the market.
Mm-hmm.
I promise you have a more personal experience when you hit this cell phone or that cell
That
phone than you
thing,
will on.
that is a big key
online.
and what plays a part in who I
Promise
recommend. Obviously I can't recommend one in specifically, even though I try to. Hint, hint. We do have to send them a list, and that's one thing that I tell them to take into account: who responds to you and how do they respond to me? Because as much as they need to respond to you, they also have to respond with the realtor, and it's a
Absolutely.
whole love triangle in a sense,
Right,
and
yeah.
maybe even a square. Even
Yeah.
further than that.
Communication
Yeah.
wins.
There is a
Communication
bunch
always.
of-
Communication
climb
is
parts.
key, and I feel like they've done an amazing job with communicating. Anytime I have a question or my client has a question, they're there to
They
answer.
do great.
They answer their phone. They'll text you back. Really, really good communication.
But anything else, or you want to take a quick intermission and we'll get right back to these fine folks? Well, we're going to take a brief intermission. Again, we want to shout out our sponsors. Chad, Garrett, thank you for coming on. They're a title sponsor for the podcast. Call Your Title. Go see them for all your title needs. And obviously, El Kamal for the amazing tacos. We might smash one or two or three of these in between intermission.
Probably the whole place.
Yeah, we'll be right back, guys. Thank you so much. Hey guys, Jalen Hardcastle here, Josh Story, Chad Greenwell, Chad Gooden, and Garrett Greenwell.
We
here
always
with
mix
the
that up too.
Yeah.
Property Panel Podcast. I did that last week too, and I was just like, hell, that's what we're gonna call it now. You want to kick off our next segment with them?
Yeah, we're going to get into common buyer questions and just explaining closings. So I guess we're going to kick off with what are some general good questions that buyers should ask when shopping for loans? Like what should they ask? What should they look for?
Oh gosh, that's good.
Well, so we always, competition is a great thing in the marketplace. So we always tell people that, of course, here's our cost, here's our rates, but go get another quote. Keep us
Right,
honest, right?
right.
So we like to do that.
And when people get quotes, does that hurt their credit, or can they do like a soft pull? Or?
So we do soft pulls, generally speaking, for the first, inquiry. Normally, whenever you get your credit pulled, you're supposed to have 30 days where it doesn't hurt you. The one thing that is happening right now, and if you've applied for a mortgage or closed a mortgage in the last 6 months, everybody's hungry, right? So if you do a regular pull, you're going to get 57 phone calls in the next hour from mortgage company A through Z, and then 1 through 90 that's trying to get you to come to them. So the soft pulls help with that. That gives us enough info that we can run and still see everything, but doesn't put you out there yet, right? And so a lot of the buyers' questions that we'll see is, what's the rate? What's the cost? 90% of people, I don't know, maybe not that many, but, a very large bulk of somebody who is buying anything. It's not just a house. Well, what's the payment, right?
Right.
So they're worried about the monthly payment. They have their budget. They know kind of what they're going to fit in. And so just easy math, let's say they want to do $1,000. So with their certain situation, what we do from there is we take the program that they're going to fit into, start working with it, see where we end up. Of course, I'm not ever going to hit just $1,000, right? It's going to be a $1,012.96 or whatever.
Yeah.
But we whittle them down to where now here it is. And so with the pre-approval, that's a really important step because that saves you all time and energy, right? If they can afford a $100,000 house, which nobody's buying a $100,000 house because they're
Right.
If they can't afford a $200,000 house, but you're showing them $400,000, it's a waste of your time and theirs, right? So that's where the pre-approval's coming in, and we're really working with them to kind of cater down to what they want it to be. That way, y'all both got our letters when we send them out. We bullet point. So the purchase price is going to be this. Here's your loan amount. This is what their monthly payment's estimated at. Here's what we need in closing cost. Here's what's entailed in it. And then I always write at the bottom, if you want to see revisions, if you found one for $10,000 cheaper or $10,000 more and you think you can get it, call me back because we've got a file worked up. By the time the file's worked up, it's 3 minutes to manipulate the numbers and shoot it back out, right? So that's a big question, of course, is your monthly payment. Another question is always programs, because John at the water cooler at your office or his work or wherever, they did this and this is better than that guy's getting because blah, right? Okay, if you do it day in and day out, of course, it's next to nothing. Pretty much once you see a credit score and an income amount, you're like, okay, they're going that route. But it's different for every person, so it's really hard to kind of zero in on that, right? So that's a real big common question. What can we use for income? So like truck drivers, for example, that's, they make $250,000, but on paper they make $25,000. Well, I'm using your 25.
Right.
I can't,
Right.
we've got to go off tax proof, stuff like that.
Yeah.
Right. And then so turn times, like what's a relative turn time? Because when you get under contract, you don't want to just be sitting out there in limbo going, well, hell, when am I going to close? Right. So we always, whenever I start a loan, I'm telling them, hey, the market's dictating 2 to 3 weeks, 3 to 4 weeks, be ready. That way it's not now we're 2 days before closing and they're like, oh crap, I don't even have a box to pack up and stuff, right? So we try to get ahead of it because, again, you all said communication's key. And so the more you communicate, the more you let them know, they've got to switch utilities. They might have to have down payments for that and, stuff like that. It just helps make the process way smoother.
What are some of the common challenges that a buyer might have that won't get them approved? Is it debt? Is it income? What's the biggest
income?
You said some.
The debt's income.
Typically, like we talked about in that last bit, 580 can possibly get you in a home, but a lot of the biggest thing is one, biting off more than your income will allow, biting off more than you can chew. But debt to income is probably the biggest thing that you run into. you don't realize, folks, I promise you, you don't realize how much you're spending a month until you go to buy a house.
Yeah,
we see
that's
it.
correct.
Promise you.
We see it
Because-
itemized.
because when you really get into it, it will all be verified. I was talking to Jalen Josh about this before we started. It's all going to come to, down to your daycare expenses. You know, I learned that
Right.
one.
Yeah.
It comes out. That's probably the biggest challenge that I've dealt with since I've started.
Right. Which you might be able to add on to this, but
Yeah, a lot of what we see. So people, and of course, it's nothing against anybody. This is just me talking as a loan officer, seeing this stuff on credit, right? So I know what I make, and I know what some of these people make. And good Lord, I wouldn't trade them their car payment. I'll tell you that they're driving their house,
Right,
right?
Right.
So car payments are ridiculous.
Cards.
Student loans coming out of college. If you've got somebody that did a specialized thing, they might be coming out with $200,000 in debt of student loans. Well, we got to look at it, right?
right.
So that stuff there, gaps are a big one. So if you started working and then you took a year off, does it make sense? Can we do it? Sometimes yes, it's case by case. But so gaps can hurt you. And then just in general, high spending. You can't have, if you're making $2,500 a month and that's what you're bringing home and your expenditures going out the door 26, I probably can't get you a house, right? So we do a lot with that, and it's more than just originating loans. We coach. Hey man, so based on what I'm seeing, if you take 6 months and dedicate X amount of dollars to get it paid off, then you can afford X.
Yeah, that goes to show what kind of crew that y'all are working with, because not every lender offers that kind of program, and we've actually worked hand in hand with these guys to get loans like that done, where it's taken 6 months to a year for them to get on a credit recovery program or whatever, and they really take care of their clients.
Absolutely.
But you got to care. That's the part
You
with
do
your
gotta
all's
care.
business.
Yep.
With this business, it's a lot of numbers, it's a lot of paper, it's a lot of this, it's a lot of that. But at the end of the day, you have to care about the people that you're dealing with, because the people see you, they see your company, and you've got to represent that in the best way possible. Even if that doesn't mean Jalen's not going to sell something, or Chad or Garrett can't, make this loan.
Right.
6 months to a year from then, you might have the opportunity to do so. So you have to look at it.
Which, to add into some of these expenses that buyers may have, even if you get your pre-approval, you might not want to go buy a car after your pre-approval. That doesn't mean you're approved and you have the loan secure.
Right.
So if you get pre-approval under contract and then you go buy a car, that might throw the deal. Or
Loan Officer 101, day 1, minute 1, in your letter that goes out to people, it's listen. Don't do anything without talking to me. Don't go buy a Snickers bar. No, I'm not. It's not that bad, but don't open any new debt. Don't incur more on your credit card than we already see. People are under the impression that once you get your credit pulled the first time, it sticks.
right.
So for us, it's 120 days on the credit pull, and so it lasts for that amount of time. That means from the time that we pull you, pre-approve you, you get a contract to the closing table, it's all got to happen within that time frame, right? So within that time frame, when we have you underwritten, there are still, stops along the underwriting path where they're going to soft pull you. And right there at the end, that's the killer, because everybody's like, woo, I'm clear to close. Let's go buy $10,000 worth of furniture. That'll come back to bite you in the butt. I've actually had to have people return stuff.
I've had
So,
I've had a deal where we were all good to go. 2 weeks before closing,
right.
they ended up buying a car, and
Yeah.
But you ended up closing it later.
That's income. Ended up closing them later, but
Yeah.
that deal.
I've
I've had
Yeah.
people quit work the same day. I've had people do all kinds of crazy stuff. You're thinking, hey, we're getting ready to close on a house. It's a great day to quit my job.
Yeah, at least wait till
what?
tomorrow.
Yeah, man.
I think you're fine after that.
So, yep.
We send the letters and stuff, like he's saying. We send letters like the common, what we're going to need to close, what we're going to need to do the loan, and that is like number one, like
Don't do anything
crazy.
Mm-hmm.
Don't do anything crazy. Definitely consult. If you don't feel comfortable talking to your loan officer, consult your real estate
That's
agent. Because
someone.
I promise you, the real estate agent's going to go to the
Well,
Yeah.
and
lender
see,
instantly.
people don't understand that even something in their mind that they think is a good thing. So let's say, for example, they go out and refinance their car. Well, man, it's got to be good because I lowered my monthly payment. That's great, but then when I pulled your credit, it dropped it, and now I can't do your loan.
Right.
So it's it's give or take, and it's those little things that, it's very coachable. If you coach people
Right,
through it
right.
and just let them know ahead of time what to expect, set
Communication.
expectations.
Always
Yeah,
goes back to
key.
communication.
Yeah.
Yep.
And
So
as
for
far
sure.
as I know we touched base over closing costs and stuff like that. So in the offers we write in, say $5,000 in buyer closing costs, prepaids, escrows, and incidentals. What are the prepaids, escrows, and incidentals?
So your closing costs. Everyone hears closing costs, and no one knows what it
Right.
is. Nobody knows what it is. I bought 2 houses and never knew what it is. But getting into this business now, I know, and it's good that we can talk about this. So your closing costs, and I've got them wrote down here, so don't mind me. So you have anything from your appraisals, credit reporting fees, inspections, title searches. You have origination charges, which is how your loan officers get paid. Everyone has to have. That's how everyone gets paid. That's how everyone does their thing. So your closing costs, in a nutshell, are where everyone else's jobs like come together that you have to pay at time of closing or can get paid with like seller concessions.
Also goes into that with taxes and insurance, right?
Yep.
So if you're doing an escrow loan, meaning your payment entails all of that, your principal and interest, your taxes, your insurance. So if you're doing all that in one, generally speaking, we have to collect 15 months of homeowners insurance right off the bat, right?
And a lot of people are,
yeah.
bumbuzzled whenever
Exactly,
y'all
yeah.
They're like, "Are
And
you
so we're
kidding me?"
pulling 15 months of that. Then you're pulling at any given time, and it goes off of the way that we collect taxes. So we collect taxes in November, right? So if you close a loan in September and your first payment's going to be due in November, well, we're going to collect the whole 15 months of taxes too, which is going to make your closing costs go higher because you have to have that amount that you can pay plus a cushion, right? So whenever that is really dealt on just when you're closing, what month, and that sort of thing there. Now, there's a huge bulk of that. So when people's like, man, these closing costs are high. I'm buying a $400,000 house. I can't believe these are high. Well, $5,000 of it's your taxes and insurance.
Right.
You know? I mean,
Yeah.
you got to understand it's all very relative to the amount that you're purchasing, what you're doing, that sort of thing.
Which it can all differ between closing and closing, but is
Yeah.
there like a good rule of thumb on what a buyer like? A
I mean,
percentage
if
or
you want to be just super safe, if you were going to write it in your contract and you didn't care that you were going to go over a little bit, generally 3%.
3%.
And so Kentucky Housing, for example, when we're looking at KHC, you have 1% origination right off the bat. So if you're talking about a $200,000 purchase that you're doing with Kentucky Housing, $2,000 is now part of closing costs right off the bat. Before appraisal, before this, before that. So if we send you a pre-approval letter and it needs $8,000 in closing costs, well, $2,000 of it's that, and then the other $6,000 is the regular taxes, insurance, appraisal, our closing fees, title fees, that sort of thing there.
And you said about 3%, I guess, is typically about what closing costs are running about.
That would be
nowadays,
on the
or
high
just-
side.
Just depends on
yeah.
the deal too, huh?
So 3% would be something safe. You know what I mean?
Right.
To where if we're trying to do a loan where nothing is coming out of pocket, or trying to get you to the table with as little as nothing.
Red line, right on that red line.
And so that's it. Yeah.
And then, what was I going to ask? I was about to something to do with the closing costs. What are some out-of-pocket costs that buyers may have? Whenever before they even get to the closing table.
The biggest one that most buyers will see is going to be your appraisal. Most appraisals are going to be an upfront charge, and then anything other than that is probably mostly going to be thrown on the back side of things with your.
Well, you're looking
septic if you have like septic inspections
or a home inspection. We don't collect for those. We don't have to see home inspections.
Which that'd be on our side on the home inspections things,
right.
like termite
Termites,
inspections,
yeah. So
which
stuff like that.
is required for FHA and VA, but in the VA, if I'm not mistaken, has to be paid by sellers.
It has to be paid by seller.
Okay,
Yeah.
okay.
And then honestly, with like FHA and stuff, it depends on what they write in the contract.
Right.
If you don't write it in
It's
the contract,
negotiable.
so you don't have to have it.
Okay.
Most of your appraisals inspections are going to be your upfront. Everything else minus that
Right.
can typically be thrown in the.
We didn't collect appraisals up front for the longest time.
I know that's what was so confusing
And
to me
so,
here recently.
yes.
Is it with the new company or? is it just
It was the fallout,
Okay.
and so when a service is done, you have to pay for it. Whether the damn deal closes or not, you got to pay for it, right?
Yep.
And so we were one of the only companies I know that were still holding out
Still
for
doing
that.
that.
And the reason that we do that is because it's ease of business. And
I agree with that.
in 2019 and 2020, if we lost a deal to an appraisal, then eating, $400 or $500, that was one thing. Doing it now 10 times over in a month, that gets over real quick, right?
Yeah,
So
I agree.
that's one thing nowadays that we're having to collect up front.
And in the ease of business, that actually
Right.
eased my mind because I still wonder to this day, I'm like, why do they got to pay out of pocket when they used to?
Yeah.
But like you said, it
Well,
really
and
does
it's-
ease the business, even if something does fall through. It sucks.
Case by case, too.
You know,
Yeah.
and it
So
is case by
we'll
case.
work with you. If that's going to hold up the deal, then we'll take that
Yeah.
chance, right?
Mhm.
But
Okay.
it's something.
That's good
It's
to know.
one of the nice things to have, but it's not necessary case by case.
Right.
So yeah.
What about closing times? Like, what's closing times on your different loans that you
6 days. No, I'm just kidding.
As,
That's why we use them.
as our boss Gary would say, Supreme Lending is the home of the 3-week closing.
3 weeks.
Well, I was about to
closing.
say, our we had a FHA deal close in 17 days, if I'm not mistaken, one time, or maybe 15. It was quick as can be.
It was
That's
just a
wild.
touch over 2 weeks. And so what we do, it's a streamlined process, right? And Garrett did the same thing when he started his. I do the same thing when I start mine. Our whole region does it. And so day one, what really helps is you're ordering the title, you're ordering appraisal. We're getting that going right off the bat. We don't wait for inspections. We're hoping that inspections come in. If
Right.
they come in and it's bad, we try to catch the appraisal. If not,
Right.
go that way. Our processors are
Awesome.
amazing.
Top
They
tier.
are.
Lori, Christy,
Lori's
Wendy, I
great,
hope
yep.
you're watching. Y'all
Lori
Top
are
is
tier.
great.
freaking awesome.
Yeah.
So
I don't know
they,
the others too much,
Yeah.
but I know Lori's great.
well,
Gangsters.
they take care of us, and they are OGs in the business. They
Yeah.
have been in forever. They know to screen ahead of time. They know to look for deposits, look for block, just whatever the case may be. They are our second set of eyes before it goes to underwriting.
Probably the better set of
And,
eyes.
yeah, probably better set of
They don't.
eyes.
They don't let nothing pass
They're,
them.
but they're
do not.
good, man.
They
They're
do
just
not.
so
And
good.
so what we do with our process is the loan is on fire. As soon as we get it's on fire from the second I originate it, they sign docs, we get it to processing. Processing takes it from there. Processing sends it to underwriting. Underwriting is the human element that reviews it, right? So underwriting says we need blah, 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 whatever it is. And so it's different for every file. No two is going to be the same. So you get your underwriting review out. That's when it comes back to us. Normally speaking, as loan officers, we don't tend to see them unless there's a reason for us to see them,
Right.
right? Because if it is pretty cut and dry stuff, Lori, Christy, Wendy, they're picking it up and running it for us, so they don't even need to involve us. Let's go get another deal, right? But if it is something that we need to get in on, that's the other huge half of our job is problem solving. Coming up with, okay, this didn't work, let's do this. Can we do this? Can we ask for more closing? Can we get a gift from family? Can we blah, 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 whatever. There's a million different
And
scenarios.
G's actually already ran through that on his first deal. He did.
He had a trial by fire on that one, didn't he?
We've done
And it
two.
worked out. That was quick too.
It's-
I feel like
it's
for
taken-
your first one.
Having Chad there, but it's very getting
It
together and figuring.
Helps when you got a good team around you.
You've got when you have
It-
a good team, anything. Can
It's
go
one of
wrong.
those things you can't practice. You
No,
can't
yeah.
can't
You gotta
practice
do it.
running
That's-
into those
yeah.
sort of things.
You gotta do
So yeah.
And on the agent side, I've had a lot of great experience with you sending me ahead of time. Hey, here's some things that I'm gonna need
Mhm.
Yeah, yeah.
before we run into them.
And that's where
Yeah.
business
Smoothness
works.
of the deal,
you know,
man,
some
yeah.
other lenders sometimes will run into an issue and then
Yeah.
resubmit it, and then
Yeah.
I'll get another issue, and it kind
Sure.
of draws it out.
Right.
Where you're like, oh, here's your
Knock it
5
out in
issues.
one.
Yeah.
Yeah.
Yeah, yeah.
Communications,
Well, see,
relations.
so for us, it's all about business building, right? We
Right.
don't buy leads. I don't pay thousands of dollars to, Zillow to buy other leads to try to get people. We like to get belly to belly, toe to toe with people.
Right.
We like to, do what we say we're going to do. We try to do it the quickest we can. If there's a problem, I'll tell you right up front. I
Rip
don't
the
BS
Band-Aid.
around. Rip the Band-Aid off.
Yeah.
The more that you do that, the more people appreciate it because it's not the fluff.
Right.
Yeah.
We all work on commission. I don't care to tell anybody that I work on
Right.
commission because here's what that means. Not only do I want to take care of you to get my paycheck, but I want to take care of you so you go tell your family and your family goes and tells
Bingo.
them. But it's a web of never ending referrals, right?
That just makes the
So-
deal smoother almost every
Right.
time, which
Yeah.
I definitely appreciate, and my
Mhm.
buyers definitely appreciate.
Sure.
So
And what are some key factors that buyers should consider whenever looking for that certain type of loan? I know that even with VA and FHA, you've had different pros and cons to those. Like what is the key points they should look into deciding those?
One, of course, what you know
you
or
can
think you're going to be
qualify.
eligible for
Yeah.
is the biggest thing.
Right.
I'm not going to get the VA loan. I'm not going to go ask about it. It's just, but I mean, it's just simple. You know, if you live, we're going to use Kentucky. If you live in Louisville, don't go looking for a USDA loan.
Mhm.
Sure.
You know, it's not going to happen. As much as I'd like for it to happen for you, so you don't
Right.
have to come out of money. It's not going to happen.
Mhm.
But just like know what you're eligible for. Don't be afraid to ask lenders questions.
And do y'all require mortgage insurance? Is that a thing that y'all require on all loans or just
It's
some
case,
loans?
so it's case by case. So
by
with
case.
FHA, you have to have it. With it's called a guarantee fee with USDA. With conventional, 20% loan to value. So
Okay.
it automatically falls off at 78. You can request it to fall off at 80. But it's pretty much that is what helps the banks for foreclosure.
Okay, that's what I was
So,
gonna ask. Why
yeah.
would they ask?
And
that
the
info?
credit scores, conventional is the only one that you can actually quote. We go through 10, I think it's 10 different companies for MI
Yeah.
for conventional. And so you can actually go in based on the file and get a quote the same way that we would quote rates.
FHA.
And so, FHA is just, this is what it is. If
Yeah.
you've got over 10% down, here's what it is.
Yeah.
And I know sometimes whenever we've done some closings, y'all kind of jokes, y'all can pay a little more than your monthly payment. So, like, kind of tell us a little bit about paying your monthly payment versus principal, and then does it, is it beneficial to pay your loan off early, or is there some repercussions to that?
Go ahead. Yeah,
It
you
makes a
get that.
difference.
Yeah, it definitely makes
regardless what it is, it makes a difference. I know with Supreme, no prepayment penalties.
Oh, that's
Um,
nice.
You shouldn't be punished for
Doing
the right thing.
I agree.
Yeah.
I agree.
you're doing the right thing. Don't go pay it off in 2 months. Don't do that. But
No, when you close, you get what's called an amortization schedule,
Yeah,
right?
I've seen
And
that
so your
many times.
amortization schedule is going to show you from payment 1 to payment whatever it is that here's your chart, right? So you can also look up what's called an amortization calculator, and you can Google it, and a million of them will come up. And so if you go on there and let's say your principal payment is $1,000, you can type in I want to pay $1,100, and then it's going to show you how far it turns clock.
Okay, I
Right.
got you. That's actually a pretty good thing. And most of the time, people toss those out at closing. They're like,
Yeah, what is
see
it?"
all those numbers? That's in the garbage can.
Right.
How do credit scores and history affect the loan process, and how does it affect their interest rate?
so of course, scores have the lower, the more affected your rate will be.
Kind of the higher risk.
High risk, exactly.
Yeah.
Versus higher, you're rewarded for your payment history. But you have even certain factors in your actual credit history itself, like some bankruptcies, foreclosures that can cause you not to be able to even qualify for certain programs. Like with FHA, if you were to foreclose in FHA, it's 2 years.
Is that how it
2
takes
years
to
before
fall
you
off?
can,
Mhm.
before you can do anything like that again. So it's not even so much it's your score; it's how the history kind of
The
plays.
history plays more of an effect than necessarily the score.
People don't understand too that it's one of those things with credit, and it is you can do 100 things right, and that one thing wrong
Yep.
will beat you up.
Mm-hmm.
And
I've seen
so,
that time and time again. With
yeah,
I'm
if
sure y'all have too.
if you go over the 30-day mark, just for example, on a mortgage, that you're 12 months out from that before you can do anything to it.
Mhm.
You can get exceptions case by case if the agencies want to do it, that kind of thing. But normally you're hosed on that. If you make 25 good payments to your credit card and you make that one late one, it can take you from 700 to 580.
Which
what
that
I
was
mean?
one of the main challenges I had getting a home. My credit score was like 600, 620, but I had no history at the time.
Yeah,
'Cause
sure.
I didn't have a credit card and
Right.
I didn't have any loans, but
Right.
credit was pretty good. But
And
the
an easy
history wasn't
thing,
there.
so this is, of course, case by case, and parents and kids and working all that out. But when a kid graduates high school, throw them on as an authorized user. Get them there's like a child credit card that you have $200 minimum. You pay into it already ahead of time. You can't overdraft it, right? So there's all kinds of little ways that you can do it. And building credit, you will always take a hit. You're going to pay a higher interest rate at the beginning no matter what.
It will
Right.
start
So
somewhere.
go finance that set of tires that at 20% and make the 12 good payments and then pay it off whenever you're doing a credit card. So let's say you go to Walmart, you get an introductory credit card, normally $300 to $500, right? So as you are using that credit card, you want to keep it under 30% usage. That's kind of the sweet spot where it's doing good for you. When you have those payments come in, as you make them, 4 months, 6 months, 8 months, you're going to get a letter in the mail, right? If you're making them on time, paying it off, doing what you're supposed to do with it, You're going to get a letter in the mail. Your credit limit just increased, right? Your credit score just went up. Every single time you get one of those letters, credit score up. So those are the things that you need to do, and it takes a while to establish credit. Everybody says credit score, but you hit the nail on the head. It's credit history, right? So the longer the history, if your mom had a J.C. Penney's card from 1986 that she's still got and still making good payments on, she's probably got an 800 credit score.
Well,
They got 30 years
funny that
history.
he mentions that. I got approved. Yeah, my only line of credit that I had whenever I bought my first house was a Kohl's credit card.
Right, yeah,
I
exactly.
remember
Yeah.
My mom was like, you know, get a credit card. I was like, I don't
Yep.
trust myself. You know,
Right.
I want to pay something when I know I got the money. So with those,
Yeah.
luckily, you can pay for your things on the credit card and then swipe your
right
debit
off.
card right after and
Yeah.
pay it off. And
Sure. Well, and you know, everybody's got a smartphone now. Everybody's got
Yeah,
apps.
yep.
So Kroger, I'm a Kroger credit card. That's where I shop for groceries.
I didn't know they had
So yeah, so
that. I might have to
you
hop on.
you
That's
get
crazy.
you get that knocked out, and then you can turn right around, jump on the app, pay it off, and helps you out.
And people kind of laugh at credit card. Dude, I love it. Not even for like watching your score, but I do credit card for derogatory marks.
Yeah.
You never know.
Yeah.
My biggest story, actually, when I went to go buy my first house from Jalen, I went to Chad. I had a collections for $150 that I knew nothing about for 6 months. 6 months, and you're talking 80 points.
That happens a lot.
80
Wow.
points different.
Yeah,
That
that's
happens a
happened.
lot.
I actually had a person I sent to y'all earlier this year, and the same thing with him. He accidentally
Had
it was
no
actually
idea.
fraud or something that
Yeah.
happened to him, but
Yeah.
they still couldn't take it off, or it wasn't disputed yet.
Right.
So
Yeah.
that actually took a toll on him being able to buy.
Looking at stuff like that, even if it's just like I have it, I probably get on my credit card once a month because I just want to make sure, like, hey, you never know if you miss a payment,
Yeah,
especially
right.
like Mary, my wife handles my payments. You know, you never know. But just like watching it, not even checking your score because Credit Karma is going to be off. It's going
Right.
to be off. But just keeping an eye on derogatory marks, your credit history will play a massive part in being able to get into what you want to get into.
Sure.
Anything else you want to ask these fine gentlemen? I got one more question, but anything else you got to ask?
I don't know if we went over refis or.
I think we're going to save that for another episode
Okay.
that we're going to dive into. Here in a couple weeks, we're going to go over how to invest, and we're actually going to dive into the HELOCs, the bridge loans, and the refis, which they can refinance as well. And if y'all got any self-plugs y'all want to do before we tune off, y'all can plug yourself in as well on some special things.
Yeah.
My question I wanted to ask was, what are the documents needed as far as the approval goes whenever they're submitting their application and stuff like that? Is it like their pay stubs, their work history, or how do you go about getting those documents?
Really depends on what kind of income
kind of
they are.
loan.
You know, if you're a hourly guy, you're $15 an hour, 40 hours a week. You know what you make. You know, if you're a factory, you know what you make. But like a truck driver, commission based.
1099s.
If you're 1099, if you're on scale pay for this job, then you go to this job. You know, like a lot of union folks. You know, it changes. So income's probably the most you're going to see. Worst
the main thing you're looking for.
main thing, and then worst case scenario, if we need something like that, we send over what's called a VOE. It's a verification of employment. You sign it. You get us an email to HR, and then we let our backside handle it. Their backside handle it, and you know we go from there. That's probably the biggest thing you're gonna see is income.
Y'all have any? We always like to do horror stories before we tune off. Do y'all got any
Oh,
horror
jeez.
stories that y'all want
Nope.
to tell us about?
Not now.
Not
Not
yet.
now.
Okay.
Cross the
Dude.
You got something spicy to tell us, Chad? Come on, leak something.
One of my worst closings ever to date, and I won't mention any names or realtors, but it was a manufactured home. It was a repo. It was held by Vanderbilt Mortgage, and it didn't have a fire seal. Every single thing that could go wrong, check. Right? So I've got this dude in my office. I'm originating the docs. This is back when we actually signed, pen and paper. And so I've got him in my office, and what I used to do with that is I would pull up a calendar, say, okay, based on today's date, here's 30 days later, blah. And he took it for Bible. For Bible. So he called out-of-state buddies to come in. He called the mover. He called the cable company. He did everything, set it up as if he lived there, right? So, again, a repo held by Vanderbilt with no fire seal. It took me 33 days to close it. So I missed it by 3 days. I told him not to do it in the first place. And so it pissed everybody off, right? Because that was out-of-state buddies.
That's 3 days.
And so we get to the closing table. I'm walking in. It's a table like this, big table. And so he's sitting down, and I'm walking in, and I'm like, all right, man, I need 2 forms of ID. And so he's sitting there just kind of looking me up and down, just, I could tell he's pissed off. And so he pulls out his concealed carry license and goes, I just want you to know I have that. And I was like, all right, fair enough, man. So I walked back and I copied his license and copied his concealed carry license. And so I set his down, so thank you, sir. Got mine out, so I just want you to know I got mine too. So. But that was one of the worst processes. And honestly, it was not. It shouldn't have been, right? Mm-hmm. It was one of those things where I guess that it was a younger me, and I didn't set the expectations properly to tell him, don't take this revival yet. Mm-hmm. But here's the day we're going to close. You know, I'm always saying you can't ever pin something.
Right.
Mm-hmm. If you got a loan officer right now that's telling you that here's my contract and I'm going to close you in 22 days,
right?
Good luck.
Right.
Because nobody knows what's going on. You don't know if there's a mechanic's lien on the seller. You don't know if there's something that comes up on the appraisal.
Not even y'all's fault or the home's fault or the buyer's fault. It could be on the seller's fault.
Well, and think of this. So, you know, we're coming out of COVID, but this happened a lot in COVID. And so you have a 40-hour-a-week person. So you got a guy working, you know, factory, Ford, whatever. And so they come in and they give you a pay stub, and it's showing 40 hours a week, and here's their money. So you plug it in, easy math, right? Well, you get the VOE, and they missed 4 weeks for COVID, you know, and like they were given exceptions for that. But now that we're through it, if somebody misses a huge chunk, well, now your money doesn't jive.
Yeah.
So there's another issue. Now we're going back and looking at it. If you've got a guy that's making $15 an hour working on Fort Knox, but then he steps off and now he's making 27, well, now you got variable income. There's just so much that goes into it to be able to be like, I'm going to close that day.
I agree.
So,
and that's glad that y'all put that up front. And that goes to show the kind of people you are with your clients.
Absolutely.
You know, no one wants to be given the wraparound, and I think that's why we've had a few clients transfer over to you, is because they felt that they were kind of getting some expectations that were never going to be met. Sure. And, you know, that's where communication, like we've said this whole episode, communication's key. And to have a smooth running business, on top of those communications, you need to have good relations. And that's why I think we've jived well. Yep. We've turned business into family over here at Cedar Hill. And, you know, we love these guys. And we're glad to have you on. We want to thank you guys so much for coming on. Thank you, Chad.
Yep.
Sir.
And, again, we want to tune off by thanking our sponsors, obviously Chad Greenwell and Garrett Goodman. No, I just messing. No, that one was on purpose, I promise. But no, we do want to thank these guys with Supreme Lending and give them a shout for any of your mortgage needs. And then obviously Collier Title, we want to thank them as well. And then El Kamal, thank you for the amazing tacos. There's no more left. Thank you guys again, and we'll see you next week for the tour on modulars.
Yep. Thank you guys.
Thank you.
Thank y'all.